So what do you think about Salesforce and this deal with Slack?
Well, I think the deal is very positive for the long term. I think everyone is upset because Benioff, the CEO, 3 months ago said that they weren't going to do any deals, and now they did the biggest. Now they just announced the biggest deal on record, paying twice the multiple as they did with Tableau. So people are a little upset about the dilution and about this big deal. The CFO is now leaving as well, so there's a lot of uncertainty. But I would just say that a lot has changed in the last 3 months, right? I mean, what are we talking about today? Vaccines being administered as early as next week. We wouldn't have thought about this 3 months ago. So I think it's very forward-looking from the CEO and the company, and I think it is transformational, quite frankly. So I would not get too upset about the short-term action in the stock. In fact, if anything, I would look to be buying. I thought the quarter was fine, by the way. Margins, big upside. Everyone wants the margins to expand, and they just did. They just actually beat margins by 260 basis points. Cash flow was strong, bookings up 6%. So the fundamentals at the company are solid, and he's building an empire. And I think you want to be buying this over the coming days on the weakness.
On the weakness, even this morning, down by 4%, you'd buy?
Yeah, I mean, the problem is, Becky, the stock's up 30% from last quarter, and it's up 44% on the year. So expectations were a little inflated headed into the print. So it's only down 4%. I would love for it to be down 10%. Then I would actually go in with, all guns blazing, if you will.
You know, you mentioned that we are talking about vaccines and trying to get to the other side of COVID, but some of your picks are still very much based on the changes that were brought about by COVID, and starting with the housing trends that we've seen. You like Sherwin-Williams, and you think that's because this continued move for people looking for housing, making sure that they have their own place to stay, you think that's going to continue even after COVID kind of disappears, or at least gets maybe a little more under control?
Yeah, and we've talked about a couple of different housing plays in the last couple of months, PPG and Stanley Black & Decker, and Sherwin-Williams also a beneficiary. We've seen great data points on housing. It's no surprise, right, in terms of permits and starts and new home sales hitting 1 million SAR last month. One data point I just want to highlight is single-family home sales that have not started are up 91.5% year over year. That is an enormous pent-up demand and backlog. So you definitely want to have exposure. Sherwin is up 27% year to date, so it is not exactly undiscovered. But this company is growing free cash flow of 30% after they pay out the dividend. Their margins are expanding by 200 to 300 basis points. They're gaining market share, and they have pricing power. So I want to have exposure to housing. I want to be selective in what I'm buying, but I definitely believe that this trend will continue, not only from COVID, but you know what? We're also hearing from companies like D.R. Horton. They said millennials are actually starting to buy as well. So you're seeing a lot of change in the housing market. And I think you still want to have exposure there for sure.
Maybe it just spurred that trend that we thought would eventually happen anyway, that the millennials would go out and buy houses. Maybe they were just a little delayed on that, but this sparks the trend, and maybe it continues from here.
Absolutely, and low interest rates are going to help. My only concern is pricing is starting to go higher, so we just got to keep an eye on home prices. And obviously, that's because we only have 2 months' worth of supply in housing, right? The inventory is not there, so let's keep an eye on pricing. But that's why I suggest that Sherwin-Williams actually they have pricing power to offset that too.
Stephanie, one of the stocks you like is another stay-at-home one, Match Group. Again, you think this is a situation where the demand for this sticks around long after we are maybe able to get back out?
Yeah, it's a stay-at-home, but it's also a total addressable market story. So you have a total addressable market of 600 million global online singles, ages 18 to 65, growing at 3.5% per year. And 65% of these people haven't even used online sites yet. So this company is going to increase their market share, increase their free cash flow, grow total revenues double digits, and also ARPU will also improve over time. But why I really like it, it's now spun out from IAC, so it's a pure play, and that should help the multiple over time and the liquidity over time. So I wouldn't even look at this company years ago. Now I'm actually looking at it because it actually is very liquid, and again, as I say, it's a pure play, and I think the multiple will improve over time.
Shepard Smith here. Thanks for watching CNBC on YouTube.